Hey guys, good morning. How are you all doing? So Dan from Trading with Dan here. This is our TD sequential analysis video for various asset classes, including stocks, gold and oil and silver for the morning. So straight over to the charts and let's have a look. So yeah, let's go on the daily, sorry. Yeah, daily S&P. Looks like we're having a nice up move this morning. A good rejection from this 0.5 fib, as you can see. These long tails on the candles. Those of you guys that do candlestick analysis, obviously you guys know that's pretty bullish, especially when you break above those candles. So yeah, looks like we're having a little bit of a move to the upside. What I would look out for is possibly a bit of a rejection from this trend line, and then maybe testing a lower low, because at the moment what we've got going on here is a high, a low, a lower high, a lower low, and then potentially we could put in a lower high and then a lower low, and then yeah, carry on with the downtrend. So we'll have to see what happens there. We obviously clearly rejected from the 618 from this whole retracement here. So yeah, we could be seeing some more downside. Obviously everything looking bad in the economy could point towards more downside, but obviously we know the stock market's not necessarily the economy. But this is looking like a pretty much textbook dead cat bounce that you often see at the beginning of many bear markets. Not even the beginning, during many bear markets you have your initial move down, your dead cat bounce, and then a proper move down. As Elliott wave people would say, an ABC correction. Obviously the C wave is quite considerably longer than the other two waves. So yeah, so right, over to oil. Let's have a look what oil's doing. Oil again looking really strong here. We did on the daily, yeah, on the daily, I was talking about testing back up to the 200 and saying how ridiculously far away it was, but we do seem to be making really good progress on it. And on the I just clicked off oil here, and then on the 4 hour you can see we fully regained it, and now we're just nicely following up the 21 and the 50, but probably more closely the 21. So yeah, I mean the trend is your friend until it's not. So we had a down move, we're having an up move. You can see we had a 9 on the 4 hour, but we've just ignored that 9 and traded through, so no real trade there. The last couple of 9s have held up price a little bit, and that one reversed price, but we seem to be trading through this pretty strongly. So yeah, there's not too much we can say about this, other than if we have a look at the weekly, you can still see we're way below obviously all the major moving averages. So I think you would maybe expect some sort of resistance around this weekly 21, but yeah, I mean, I think we are mostly going to be following what the stock markets are going to be doing. So yeah, if we start to see a leg down in the stock markets, I'd expect to see a leg down in oil also. Gold looking really good, very constructive obviously on the weekly. Daily, yeah, daily consolidating near highs. We tested down quite a few times into the mid 1600s. Well, it's not even the mid 1600s, is it? Well, I guess that was nearly, but yeah, high 1600s. Keep getting bought back up, and now we look like we're making the move up. We have been talking about this tightening range we've been in gold, and now that we are breaking out of that range, you can probably see quite a bit of sustained trending action to the direction we break out, which happens to be up. So you would expect to see some a lot more movement now. I'm pretty convinced we're going to see we're going to take out this high and then see over 1800 in this move. Even if we get another, we're on a green 3 candle, so another 4 days, 4 5. Sorry, what am I even talking about? Another 6 days of green to get us to a 9 sell. But that could even be up to the 1900s. This could accelerate fast this move now that we've broken out a tightening range that we've had going on for a month basically. Over a month. Look at the 4 hour on gold. Again, you're just seeing a more zoomed in version of the daily. So yeah, but yeah, broken out of the same range again that we're looking at on the daily. But we've actually got 409 here. So this is a double 9. We had one here we didn't really react to. So it's possible. I think we will get a bit of retrace from this one. I would guess we wouldn't really get much lower than 1740, but yeah, I think that is on the cards. If we do take out the low of this 4-hour candle, I would target around the 1740 to say even 1730 level, this range, and then see how we react to that and bounce back up. I mean, you could target the 21 on the 4-hour, but I don't think that's yeah, I mean, you could do. But yeah, I think around just a little bit low. I think, bearing in mind this will obviously move up during the course of this price action, but yeah, I think around this level will be a good level to test as support. As you can see, it's pretty strong, pretty important horizontal level, and then yeah, bounce up from there. So, but that may not happen. We may plow straight through this 4-hour 9, but yeah. So we'll just have to see what happens. You either just remain long if you're long this. If we just trade above this 9 and keep trading green candles, start a new green count, but yeah, if we trade below, start a red count, a red 1 and a red 2, yeah, I'll be looking around here. Obviously we're in a very bullish trend in this market, so I wouldn't look for massive performance from the shorts, but yeah, but you should expect some short-term move nonetheless. So silver, let's look at this silver. Look at that, guys. This is the sort of thing I'm expecting from gold. Once it plays out a bit more. Obviously we've had a tightening range here, tightening range, and we're on a 4-hour. We'll go to a daily, look at it to put it in a bit more context. But yeah, so we still have the same tightening range pretty much we saw in gold here. This was looking more bearish. Obviously the bearish move down here, a flat bottom. This was like a descending triangle, but these patterns are only statistically more likely to break down. And don't forget, we have had a pretty good up move. Well, up move from here more recently, but then also if you look on the weekly, have we even had an up move really on the weekly so much? No, we've just been consolidating around the zone, so I take that back about an overall upward trend, but certainly from this level here we've had an upward trend. But yeah, so daily though, we spoke about this on Friday, is coming up on a daily 9 tomorrow though, yeah, we could potentially see a retrace from there. This to sort of look how TD will often work. We'll sort of move into accelerate into the end, and then we'll then get the sell off. But again, I would look for this to be supported. Well, anywhere around the low 1600s. This is our first 9 in the sequence, and as you can see, I just showed you in gold. We did have a double 9 that we played through. That was on the 4-hour, wasn't it? A double 9 we played through, but yeah, in fact that was on the 4-hour, so it's not as relevant to comparing a daily chart, but but yeah, so it's something I'll be keeping an eye on. A bit of a retrace in the silver. We're obviously squeezing out a lot of short positions here, so we could easily this could easily blow off to like 1900 again, have a little double top, and then sort of a sell off round to the mid range of this, and then onwards and upwards. So that's potential I'll be looking at. But yeah, you've got to be cognizant of the fact we've got a daily 9 here before you start FOMOing in. The time to buy was clearly the breakout of this tightening pattern. So on this one candle, we clearly were broken out, and then yeah, and then onwards and upwards. Another thing I want to show you guys is this gold silver ratio, because obviously, I mean, this is clearly the performance of gold against silver. Is how many ounces of silver you get for an ounce of gold. But yeah, you can see this ratio is coming down quite strongly after basically going up quite strongly and topping nearly on a 9 actually. So we have got a daily 9 in this ratio coming up, and yeah, I mean that's obviously going to correspond with the daily 9 in the actual just the actual flat silver price. So yeah, a bit of a retrace in this, a retrace in the price as well. This could add fuel to the retrace in the silver price, especially if gold does consolidate a bit and the ratio goes back up. That is clearly going to hammer silver down. Silver is sort of like the altcoin to gold. It has obviously a higher beta, moves more when gold moves. So yeah, but though overall I would say maybe we can start making moves lower. I own a lot of physical silver, a lot of silver ounce coins, those 49s, 999 purity. So yeah, Bitcoin, we do a separate Bitcoin video, so if you do want to have a look at that, just check out my other video from before. TDOC was one of the buys we've been looking at. I've been buying these dips, guys. So I bought this dip and I bought this dip, and I have bought these other dips as well in the past. But yeah, TDOC again. Currently on a daily red 1, but yeah, I mean, it's a strong price action. We could start trading upwards and then start a new count. Let's have a look at the 4 hour. Bearing in mind these are Friday's charts because this market's not open yet. Yeah, 4 hour. I mean, we're just sort of forming this consolidation here. I mean, you could look for a break of this pattern. So basically a break above, would say like 187, 188, and then we could spark another run to basically 220. That's what I'll be looking at in that. And yeah, I mean, so far as the actual stocks are concerned, they've not opened since Friday, so it's only really 1 day's of price analysis that we're actually analysing compared to before. But yeah, let's have a look at Tesla. Yeah, again, pennant formation, consolidating, so it's either going to break up or break down. It will probably just go the way the stock market goes. Stock market breaks up, this pennant will break up. I mean, it's a lot of the same. A lot of these stocks will follow the stock market, albeit Tesla has a bit more of a wild time of it. So yeah, let's have a look at Facebook. Yeah, Facebook, again, it's just, these pretty much look like the same as the stock market charts. Let's have a look at some of our, see if some of our trade ideas have been doing much. Yeah, so we've got this daily 9 now on the Beyond Meat. This is what we were looking at. This is looking toppy. It's looking like we could come down at least test the 21. Test the cross. It's not a golden cross, it's just a 21-200 cross. It's not as significant as a 50-200, which is known as the golden cross. But yeah, this is looking toppy. Yeah, it's looking toppy. RSI look like we're moving down out of this overbought zone. MACD look like it could start to come down. This is looking like a sell. I would probably say, let's not have the arrow, let's have a regular line. I'd probably say under this level, sort of extends along to there, is potentially a sell level. So for a test at least down, I'd say to at least down to around here, the 110 zone. I mean, it could start a larger rally, but that's what I'd be looking at initially. Chewy bounced off the line with Drew. I don't know why it keeps disappearing. You guys watch my videos, you know I drew basically the line here for it to bounce off. It's another thing that I'm buying, another thing I'm long off. Bought this dip. So yeah, let's have a look at this list here. Take two. I think we're having a 9 on take two. Oh, we did draw it on here. We drew it on here. So there you go. There's trade break below here. Move down. This was the one that I believe was on a weekly 9 as well. Yeah, well, weekly 9 coming up. So take two could be in for a bit of a correction. Clorex. Again, it's the same. It's pretty much the same. Same 9 break below. Potentially a sell trade in there. Yeah. So we've looked at that. Let's have a look at fuel cell. I know some people are trading fuel cell. Looks like one of those penny stocks. You know what? When I saw people trading it, and then I looked into it. Do you know what I then looked at? I looked at this, guys. Look at that for a bubble pop. The 2000. Here we go. We've got the 2000 Nasdaq. Basically tech bubble burst. We went from just, oh my god, guys, wow. From basically, we'll just call that $8,000 a share to $1.84 a share. This is the sort of thing that people need to be aware of. Whilst they might think, okay, the stock market indices as a whole trends upwards, don't forget shares, companies are continually added and taken away from the actual indices based on their market cap. But any individual company doesn't ever have to take out its highs again, doesn't ever have to go to new highs again, and can just literally just look like this. So you have to be careful when you're picking individual companies and sort of putting all your eggs in one basket. Even like say Apple, for example. Apple could have a lot of problems going forwards with just trade, just the affordability of their phones, just generally a general move to more Android or open source software and not having to overpay for everything. I mean, Apple could maybe not ever reach the highs that it's at now or it was before. Yeah, this can happen. This is a warning to you guys of what can happen. And then, like, say the money losing companies like Uber and what happened to WeWork not able to basically IPO and yeah, I mean, you just got to look at things like this can happen. I get it, the stock market, the indices as a whole may not be able to do this because they are continually getting replaced with and companies are dropping out as the market cap falls below a certain level, and other ones are getting added as they then overtake. So it has that dynamic to it, but any individual company does not have that dynamic, guys, and it's dangerous thinking that it does. So let's have a look at Apple. I mean, it's dangerous to think we will take this high out and keep going. I mean, we don't have to. I mean, this is the monthly chart. It's pretty parabolic. This, I mean, you can't tell me that this does not look like this. Oh, sorry guys. Does not look like this. Granted, it could just be this first part. We could have a retrace and go back up. You don't know what part it is of this, but eventually you maybe guess that this is what this will end up like. That's what Apple will end up like, basically. But yeah, granted, we're not as parabolic as we could be. We could still have plenty more room to go. But eventually, eventually it may have to come back down to earth. So anyway, that brings us to the end of our TD analysis for today. Yeah, hope that was interesting to you guys. Yeah, remember, it's not financial advice. I'm not a financial advisor. I always do your own research. And yeah, look out for my Bitcoin video if you're interested in Bitcoin analysis. And yeah, and I'll speak to you guys soon.